You are watching the numbers on your screen fall away. You see Bitcoin dropping below $90,000 for the first time in many months. You are sitting there and feeling a heavy weight in your chest. You are wondering if you should sell everything right now. Your phone is buzzing with messages from worried friends. Everyone is asking if this is the final collapse. I understand exactly what you are feeling. I have stood in the same place many times before. What makes this moment so frustrating is the feeling of uncertainty. Every person who goes through a market crash thinks their situation is unique. They believe that this time is different. But I am here to tell you that it is never different. The numbers and the dates change, but the human heart remains the same. It never is different, but it always feels different in the moment. I spend a great deal of my time thinking about market psychology. I want to understand why smart people make the same mistakes over and over again. If you are holding Bitcoin right now and feeling that pit in your stomach, you are not alone. If you are on the sidelines wondering if this is your chance to get in, you need a plan. I have analyzed every major Bitcoin crash since 2011. I am not talking about the small dips that happen every other month. I am talking about the real crashes that make people question if the system will survive. I have looked at the 70% and 80% drops. What I found is going to completely change how you think about what is happening today. Let us start with the math, because the math does not lie. In June of 2011, Bitcoin crashed 99% in a single day. It went from $32 to literally 1 penny. You might think those were just the early days and they do not count. But you would be wrong, because that event established the psychological pattern. In April of 2013, the market crashed 83%. The price dropped from $260 down to $54. The major exchange at the time could not handle the volume and everyone panicked. In December of 2013, there was a 50% drop overnight. This happened when China issued its first major ban on digital currency. Then we look at the period from 2017 to 2018. Bitcoin peaked at nearly $20,000. 1 year later, it was trading at $3,200. That was an 84% drop. This was not a quick flash crash. This was a slow and soul-crushing decline that lasted an entire year. In March of 2020, we saw the global pandemic crash. Bitcoin lost half of its value in just 2 days. In May of 2021, it hit $64,000. By July, it was back down to $29,000. That was a loss of over 50% in just 11 weeks. And now we find ourselves in late 2025. The market peaked at $126,000 in October. As we speak, it is trading much lower. The total market value has lost over $600 billion. You might be asking what the underlying pattern is. Every single one of these crashes follows the exact same psychological playbook. Once you see this cycle, you can never unsee it. Phase 1 is what I call Euphoria multiplication. This is when the asset is not just going up, but it is going up too fast. People who never cared about Bitcoin suddenly want to know how to buy it. You hear about it from your relatives and your neighbors. Your brain begins to rewire itself to believe the price will never stop rising. When the price hits $100,000, you think it is going to $1 million. This is called recency bias, and it destroys more wealth than anything else. Phase 2 is the catalyst that nobody saw coming. The catalyst is always different, but the result is always identical. In 2011, it was a major hack of an exchange. In 2013, it was a regulatory ban. In 2020, it was a global health crisis. In 2025, it might be a trade war or a shift in the Federal Reserve policy. But you must understand that the catalyst does not actually matter. The catalyst is just the excuse for the market to correct. What actually causes the crash is leverage. Leverage is when people borrow money to buy more than they can afford. Imagine putting up $10,000 to borrow $90,000 more. If the price drops 10%, you lose everything. The exchange will automatically sell your coins to get their money back. This is called liquidation. When thousands of traders get liquidated at once, it creates a waterfall effect. Forced selling pushes prices down further, which causes more liquidations. This cascade is what turns a small dip into a 30% crash. In 2021, over $1 trillion in value was wiped out in a single week. Phase 3 is what I call the demoralization grind. This is where people's lives and spirits are truly tested. The market does not just drop in a straight line. It is a staircase of hope and despair. The price drops 30% and then it bounces back 10%. You think the worst is over and you feel a sense of relief. Then it drops another 20%. This happened for 12 months straight in 2018. It is 12 months of watching your portfolio bleed out slowly. It is 12 months of your family asking why you are still holding on. The people who bought at the peak often hold through the first drop. They hold through the second drop because they do not want to sell at a loss. Then, at the very bottom, they finally give up and sell everything. This is called capitulation. It happens at the end of every major crash. The last true believers finally break. And that is usually exactly when the market begins to recover. However, something is legitimately different this time. In 2024, the United States approved spot Bitcoin exchange-traded funds. This allowed regular people to buy through their normal brokerage accounts. Major institutions like BlackRock and Fidelity entered the market. By October of 2025, these funds held hundreds of billions of dollars. Many people thought this institutional money would make the market stable. They thought the volatility would disappear. They were wrong. What actually happened is that these institutions bought all the way up to the top. When the price dipped below $90,000, these new investors went into the red. Institutional investors began to panic sell just like everyone else. We also have to look at the massive positions of corporate holders. Some companies have bought hundreds of thousands of coins with borrowed money. If the price drops below their average cost, they could face serious debt issues. If a major corporation is forced to sell, it would break the narrative of the market. When narratives break in the world of investing, the prices collapse. We also have to consider the 4-year cycle. Historically, Bitcoin peaks about 18 months after a halving event. The last halving was in April of 2024. 18 months after that date brings us exactly to October of 2025. The pattern has held perfectly so far. Now we are in the phase where the cycle typically turns downward. Some analysts believe the 4-year cycle is breaking because of the new funds. Others believe we are entering a brutal multi-year bear market. The data shows that Bitcoin is currently down about 30% from its peak. In previous crashes, it has dropped as much as 80%. If history repeats itself, we could see much lower prices before the bottom is in. The psychological shift that happens now is not really about the money. It is about your identity. When the price is going up, owning Bitcoin makes you feel like a genius. You feel like you understood something that other people missed. But when the market crashes, that identity crumbles. You start to feel like the person who fell for a digital scam. The pain of feeling foolish is often worse than the financial loss. This is why people hold on when they should sell. They do not want to admit that they were wrong. And this is why they sell at the bottom. They just want the psychological pain to stop. At the top of every bubble, you hear people say that the old rules do not apply. At the bottom of every crash, you hear people say that the asset is dead. We are currently in the middle phase. People are still hopeful, but they are becoming very scared. They are saying this is just a normal correction. But if the price drops another 20%, the tone of the conversation will change. When everyone finally agrees that it is over, that is usually the best time to buy. But almost nobody does it because the fear is too intense. So what should you actually do with this information right now? You need to figure out which category of investor you are in. The first category is people who bought recently and are currently losing money. You must ask yourself if you believe the asset will be worth more in 5 years. If the answer is yes, then you must do nothing. Selling now simply guarantees that your loss becomes permanent. But you should not buy more yet, because we do not know where the bottom is. If the answer is no, then you should sell immediately and move on. Hope is not a financial strategy. The second category is people who bought a long time ago and are still in profit. You are watching your gains evaporate every single day. You should consider taking some profit off the table. Maybe 20% or 30%. Locking in real gains will help you sleep at night. Paper profits are not real until you actually sell. The third category is people who do not own any Bitcoin and are waiting for a chance. You should wait, but you should also prepare. Figure out exactly how much money you are willing to risk. Do not invest everything at once. Use a strategy called dollar cost averaging. Buy small amounts as the price drops further. This way, you are not trying to time the absolute bottom. You are building a position over time at different price levels. Only do this if you can afford to lose that money both financially and mentally. If watching the price drop keeps you awake at night, then you should not be in this market. Bitcoin crashes have happened since the beginning. The market crashed 99% in 2011 and then hit new highs. It crashed 84% in 2018 and then hit new highs. Every person who held for at least 4 years has made money. Every person who bought at the top and sold in a panic has lost money. The pattern is not just in the price charts. The pattern is in human behavior. People get greedy when prices are high and they get fearful when prices are low. The people who made life-changing wealth did not time the market perfectly. They simply survived the market. Based on every historical crash we have seen, this is likely not over yet. Bitcoin typically does not bottom after just a 30% drop. It often has false recoveries that get people excited before dropping again. It breaks people's spirits until they give up. The question is not whether you believe in the technology. The question is whether you can survive the process of being proven right. If you cannot handle a 60% drop without selling, then you should not own this asset. The volatility is a fundamental part of how this system works. Stop checking the price every hour. Stop reading every scary headline. Make a plan and stick to it regardless of what the market does today. If you believe in the long-term future, then crashes are opportunities. If you do not believe in it, then crashes are a signal to stay away. The worst thing you can do is sit in the middle and let your emotions lead you. The cycle repeats over and over again. We are in the crash phase, right, Gio? It will likely get worse before it gets better. But history shows us that it always gets better for those who can wait. The only way to lose is to let fear make your decisions for you. Protect your capital and protect your peace of mind. I will see you in the next one.